All right, crypto market updates. Looking at Bitcoin, looks like we've got multiple days of some counterforce here. If since this entire month and a half sell-off, this is the first time we've had 5 consecutive green days. The next major horizontal resistance point is right around this zone right here. So that's, probably 4,400-ish on Bitfinex. So we'll see if it can get enough momentum to make it up to that point. Yesterday I said I wanted to see a slight uptick in volume on the daily. So we've had a lot of sell volume, and we've had an uptick today on this volume. In moments like this, though, I like to look at the weekly. Kind of just puts things in perspective a little bit. So you have this nice bullish engulfing candle. Nice green candle that's twice the size thus far, twice the size of this red candle right here. Obviously after a month of selling, sellers get exhausted. Yesterday we looked at how we've had a green week pause, and usually when you start to see a second green 1 week candle after a big sell-off, it's usually indicative of some counterforce that's coming. Now, ideally, my ultimate target, what I would like to see, is I'd like to see this market creep all the way back up to retest this area, to retest prior support. The reason why I say that is because I really do think this is a magnet area. We spent so much time grinding at that 6K area, and we broke down, and the instant we broke down from this area, market sentiment just went in the gutter. Market sentiment was pretty low this year, but I think with this little bull trap here and this sideways, I think a lot of people got faked out, and then market sentiment just really went into the gutter. I call this zone right here the crypto scam zone. I call it the crypto scam zone because when you look on social media, everything, all things crypto is a scam. All coins are a scam. ICOs are a scam. Everything's a scam. You're a scam. This is a scam. It's just a lot of negativity, pessimism. It's a meme. It's literally a meme. It's so comical, right? How emotions and sentiment can change so drastically, right? It's completely manic, right? It's interesting. It's a really, really interesting case study in market sentiment. So I say, when the prices are low, whether or not I have some drawdowns on some stuff, whether or not I start buying too early on some stuff or any of that stuff, the price is low. I stick to my guns. When the price is low, I'm bullish. Right now I'm bullish. I don't care if we go into a year of accumulation. I don't care if we end up dropping low or whatever. I'm a bull right now. We're not in a bull trend. We don't have any confirmation of a bull trend. We haven't had a higher high at all in 2018. But I'm bullish. What can I say? Right? And when the prices are super high and parabolic, I'm bearish. Sometimes it takes a while. It took a long time for this market to break down and bleed out, right? It was like just months of waiting, right? And so, it's a similar situation. It's just the opposites, the yin and the yang. So it's the bigger zigzag of the market. I mentioned the term zigzag yesterday. It's my new metaphor for the market, especially in Bitcoin. We have a lot of zig and zagging. So this is just just like you see all these smaller zigzags, right? This is a bigger zigzag. It's a bigger zigzag, right? Is this the bottom? We don't know. Market sentiment wise, it sure as hell felt like the bottom. Could it go lower? Sure. Right? We'll only know in hindsight. But the general principle, principle is this is a larger market zigzag, right? So when you're on the zig, anticipate the zag, prepare for the zag, focus on the zag. You know, when you're on the zag, focus on the zig. You know, don't stare at your hand in the gun. Put your eye on the scope and stare at where one thinks the market is going next. Focus on the, you know, the laws of motion as it applies to Bitcoin. Like I said yesterday, Bitcoin's kind of a very unique asset class. Its market behaviors it's actually quite remarkable compared to other markets. You know, there have been stocks. I said this yesterday. There's a lot of stocks that actually they don't zigzag. There's some stocks that literally bled out and just died. Like, you know, HMNY. There's one that was like a complete shitcoin. There's some stocks that kind of have done what TRST has done. We saw the delisting, and these are like stocks that kind of go on the verge of bankruptcy. Right? So it's not like you can just necessarily apply all the same principles, you know, like this, right? So here's a market that you probably didn't really want to be knife catching, right? But for me, there's a difference between, you know, going in hard and knife catching Bitcoin, which is still the king daddy of crypto. There's nothing else like it. It's the most liquid, has the most buy support. I don't care how good one thinks their shitcoin is. They cannot compare to liquidity of Bitcoin, right? The Bitcoin market behaves in a very specific way. You might not necessarily get that with all altcoins. Like, so here's an example of an altcoin that gets delisted. And then it just kind of like, there's not really any zag here. There's a lot of zig and maybe a little bit over here. It just kind of bleeds out, right? So this is fairly pathetic considering how much it dropped when support snapped, right? 88% drop, and it hardly, no dead cat, right? No retest prior support, turn resistance. So one can't necessarily just apply the exact same metric. Now, if one wants to try to scrape some of this stuff off the bottom, if the project's still alive or whatever, then, you know, in future, maybe there might be something to this, right? One could possibly, with smaller position size, pick through the battlefield, pick through the carcasses like a vulture, you know, and see, almost like stocks like HMNY. Like, I bought a very small position of that several months ago. I still have it. It's kind of like a fun all or nothing. This market that literally died 99.99%. Like, I'll just show you quickly for anyone who doesn't know it, and then we'll go back into crypto. I'm not gonna focus on stocks too much, but HMNY. I'm sure many folks have seen this, but now here's how's this for a market? Look at this. I mean, how do you go from, like, what is this? How do you go from $34,000 to 1.6 cents? Like, a lot of people got completely wrecked trying to knife catch this thing. So I bought some at, you know, around 2.5 cents or whatever, right? Because why not? You never know, right? It could do something stupid one day. You know, you put in like a few $1,000s, just kind of like whatever, money that could just throw away. And then maybe one day it does that, and you're like, all right, well, and it's like add a zero to that. You know, pretty simple. Actually, before I just want to look at the Dow Jones kind of broke a new low the other day. I just wanted to look at that quickly. A little bit of a bounce. So we don't know if this will be full reversal, or if it's just some tax harvesting. But it looks like it almost wants to print a head and shoulders. Maybe we have a little relief rally in the new year after harvest season, and then if it doesn't break a new high or whatever, and then it retests and we have like a head and shoulders. So I'm just still kind of playing the waiting game with stocks. I'm not in a rush with stocks. I'm going to be adding to my stock investment account this year. And I'm mostly sitting in cash, even with like stuff like, and you know, in some of these ones where I thought was a really good knife catch, I cut on the breakdown of support, like Deutsche Bank, and then it just keeps bleeding out more, right? So I cut when this broke $10 support here. And I'd still be interested in knife catching this, but I think I'm just going to wait it out, let it bleed out. You never know. They could go bankrupt. You never know. But there's a lot of stocks that kind of look like they're in rough shape. Can I explain a bit of tax harvesting? So basically tax harvesting is, you know, if you've taken some losses, depending on what your tax jurisdiction is, if you've taken some losses in the stock market or in crypto, you can sell them at the end of the year to realize a loss, and then that could offset either other profit you've made in the markets, maybe earlier in the year, or maybe it could offset other income that you have, other source of income, like if you have to pay tax for a job or whatever. You need to consult your accountant in relation to that, because you know, every jurisdiction is different. Like I know in the US, you can only carry a $3,000, like you can offset as much profit as you can if you've made profit. But as far as like actual losses, it's like $3,000 a year or something. And you can carry it over forward 3,000 every year into the future. But, you know, if someone has like a, you know, 6-figure plus loss or whatever, then, you know, it's going to take several decades. You know, you may not ever be able, like your entire lifetime, you're going to have deduction of 3,000 a year maxed out, right? From whatever. So it's, whereas like a tax debt, you could end up carrying for a very long time. So, or it could just drive people into bankruptcy, really. Anyways, enough of that. I digress. Let's look at some crypto. Okay, so I like to look at the 1 week. Everyone knows I'm a big fan of the stochastic RSI. It crossed under. Usually it leads, when this happens, historically, you know, except for like this really gritty chop right here, right? Like this is just crap. But historically, it usually leads to multiple weeks of green, right? So we'll see if we can produce multiple weeks of green for some counterforce. You know, in the perfect world, it would be nice to see us retest this zone right here, right? Since it was such a key area, key emotional area when it broke down, key structural area in the markets for this capitulation. So that, to me, this would be like a really good target. I would probably still, I mean, I guess whatever runners I'd keep on the table will just be anything I kept as an investment. Trade-wise, I probably would close out probably everything on the table trade-wise at this area if we get to this area, right? But the next major area of resistance is this area right here, right? So we'll probably take a pause if we make it up to there. So let's see if we can build up enough momentum on this. If we look at the Hikinashi on the 1 week, still looks like it's red on the 1 week. So it hasn't quite changed green yet on the 1 week. But it's usually a little bit late. It's usually a little late to the party. I mean, by the time, for the Hikinashi, I like the 1 day better. Because like by the time it actually decided to turn green, you know, the markets are already up there. So if we go to the 1 day, we can see some more green. So we'll see how this we'll see how this plays out. Right? I've got I still have a mixed bag of stuff, like a sprinkled shotgun stuff that I did buy in through here. You know, in hindsight, I definitely should have cut everything on the break of support. That would have been the better play. But, you know, hindsight's 2020. So, altcoins, let's look at altcoins. So some altcoins really popping off. And this is what I mentioned yesterday when you look at stuff like Waves and such. I think Waves must have made a new high. It can be very quick. Look at this. It can be very, very quick. For an altcoin market, when it's alt season, it can be very quick for altcoins to completely recover everything that they've lost in a very short period of time. So in this case, when you look at Waves, it didn't take the stairs, you know, in the bull trend, you know, so in the bull trend, it takes the stairs up and the elevator down, right? So it's well, actually, this went the elevator up and the elevator down, right? But it slowly climbed, stairs up. But you can kind of see the slow grind. So we've talked about different phases in the bear trend. The best phase in the bear trend, which is where I did the best this year, where I performed the best trade-wise, and where I made the most profit this year was in the volatility, not on Waves. I'm just using Waves as an example. Sorry, there was harvesting my bad. This is the BTC chart. There was harvesting alts last year, so I did cash out on all the parabolic moves. But if we look at the USD, so this is crypto's such a unique market. It's so interesting because you've got parabolic moves on the BTC charts last summer in 2017, but new USD all-time highs in December and January, but not new highs on the BTC charts. So there's like two opportunities to sell, you know, basically cash out of alts, and basically everything took its market dominance back. So if I look at, let's see if I can find an example, if there's any examples of I don't think was there any USD markets with Waves? No. Okay, well, most of the other markets had some USD markets, not Waves though. So let's go back here. Okay, so on the BTC charts right now, over the course of, let's calculate this in weeks, over the course of 1, 2, 3, 4. So basically over the course of 1 month, 4 weeks, this market has reclaimed on the BTC chart its entire 2018 losses. So anyways, we talked about, we're just going to look at this on the BTC chart right now, even though we had a second quick alt season on the USD charts. So its actual all-time highs were here, because in reality, fiat is what you pay everything with, right? This is what you pay your bills with and what we use in life. So in reality, this was actually its peak all-time high right here. Not here, but this was like whales flipping into Bitcoin for Bitcoin to take its market dominance back, because from here to here, Bitcoin was stealing the show. Altcoins were bleeding. It was all Bitcoin. Bitcoin was the best thing to trade, with occasional pumps like Bcash or whatever, because its drama is closely tied to Bitcoin. But so you'll notice like this, like peak volatility here, but from here to here is like the slow bleed, right? This is like the slow grind, which is really probably like the worst. You can kind of see it's like a big descending wedge, actually. Large descending wedge. So broke out of this large pretty much a descending wedge that lasted all year. Very, very large descending wedge pattern. So this is an example of how potent a descending wedge pattern can be when it breaks out. So speaking about large descending wedges, here's another for as far as like the entire market cap. This is a very large descending wedge, similar to what we just looked at with waves, right? But even bigger. So this is a new feature. You just type in total. It's a new feature on TradingView, so that's nice that they've added that. So we've looked at this area. We've looked at this. We haven't broken out of it, but we're bouncing at a very crucial level, market cap wise, where we've had resistance and support and testing the bottom area of this line. If we ended up breaking this descending wedge market cap, then that would be, in my opinion, that could be confirmation of a reversal, right? Obviously, Bitcoin would have to lead that charge. Bitcoin's the leader. Bitcoin doesn't do it, then it's not going to happen. We already know this, right, about crypto. And you know, another, like a huge reason for that. Actually, I want to show you folks another site. So there's a site called coinmarketbook.cc. And what's interesting about this site is it doesn't just look at market cap, it also looks at buy support, right? Because you can have a very large market cap, but with very thin, little to no buy support. So it actually kind of shows, you know, more liquidity, right? And it'll measure, buy support. So here it says sum of buy orders at 10% distance from the highest bid price, right? So it kind of measures how much liquidity, how many orders it has down, right? So you could see that Bitcoin is still the king because it has all the liquidity. It has all the buy support. It has, you know, if one wants to, and obviously this is why large financial institutions are focusing exclusively on Bitcoin right now for their products, because it actually has a level of liquidity that's pretty good. So someone's saying the site's not very well updated. So yeah, this is just something that I've seen recently. It probably, you know, needs some updating. It could have some glitches in it. Now, just because I'll also just say this, just because something doesn't have a lot of buy support doesn't necessarily mean it's not a good investment, because sometimes newer projects can have very thin buy support and still be very, very good investments. I mean, like if we looked at Bitcoin's buy support, or actually better yet, if we looked at Ethereum's buy support in 2015, it was very non-existent, right? It's very small, very thin, right? But obviously, if you were buying, if you let that deter if you were deterred by that, then one wouldn't have bought Ethereum at, you know, $1 or 50 cents or $2 or $3 or whatever price, right? So, but this kind of an interesting metric to look at buy support. You know, perhaps there's a better site for this sort of thing, or it could be done in a better way. But that's also an interesting thing just to keep in mind, right? To be able to see how much buy support, because sometimes you could have like this multi-billion-dollar market cap that has, you know, very, very thin order book, right? Can I explain buy support versus volume? So volume's actual trades executed, and buy support is just orders placed on the books. Like if you're like, okay, I want to buy 100 Bitcoin at you know, $3,000, and you place it on the order book as a limit order, that's buy support. Whereas if you did a market order of 100 Bitcoins that immediately executed, or if your order got executed and someone dumped into it, then that's volume. Yeah, stink orders is buy support. Yes, that's right. this to me would be fairly bullish if we can break out of that. And then if we can obviously like retest, and then, you know, if we did something like that and start producing higher highs, or if we could break out of that zone, break out of that line, and even just do some sideways, that would be okay too. Even if we did a little sideways there, that'd be all right. So that's kind of what I would look for moving into 2019, right? So this is kind of what I'm looking at. But the overall market cap, I mean, things bled out a lot. I mean, things, you know, the overall market cap, things bled out a lot. Things got fairly wrecked. And then if we look at the Hikinashi again, this is a very interesting zone because, as I pointed out yesterday, this was the area and price where we had on the Hikinashi the last major correction before the biggest run up. This is the biggest gains in the run up of the bull trend. In the entire bull trend from 2015 to the end of 2017, this was the biggest move that we've seen. This was the last parabolic blow off, right? So it just curved up, started going a straight up vertical, and it just didn't stop week after week after week after week after week of just buying, right? So obviously that's just not sustainable. Isn't it P lower or doesn't get filled? It's still possible they might get filled. I mean, we're not necessarily out of the woods yet. Like I said, I don't mind not being all in, quote unquote. I generally like having some fiat, even if it doesn't, my lowest stink bids and stuff don't get hit. I almost kind of just set those as a hedge or as a precaution. Like, okay, well, if price drops slower, I'm not going to cry about it. My philosophy is like when the market's capitulating, if I'm not buying, I'm crying, right? So, so that's just kind of the way I see it, right? If things drop lower, and yeah, sure, there's drawdowns from other things that I bought and all this stuff, but having that last batch of fiat in my trading account available for really degenerate orders between the 2 to 3K area is just there kind of as a hedge, right? It's there to know that if things get much worse, that I've still got dry powder. I'm still in the game. I'm still buying. I didn't go all in. I'm not, don't have massive drawdowns. And also Bitcoin that I bought higher up can be used as dry powder and flipped into altcoins. And we see just how explosive altcoins can be. So that's been my plan. You know, in hindsight, could I have changed the way I handled this? Yeah, definitely. I definitely made some mistakes in the latter half of this bear trend. Got a little too bored and comfortable over here, buying a little bit too much Tezos. I actually don't have any regrets buying the Tezos up here. I would have bought some anyways, but I definitely put in a lot of money into it. They're probably a little bit too much, right? I bought a lot more in these lows too. But this is the type of market conditions that I don't particularly do very well with are slow grinds and lack of volatility, right? I'm mostly like a volatility trader, right? And I've mostly just been focusing on the spot market. So when you're doing spot market, even in a bear trend, if you're not really playing the margin game a lot, if you're not really shorting a lot, then the only way to make money in a bear market playing on the spot is you have to knife catch the bounce plays and then sell on the bounces. And so for that to work, the more volatility one has, the bigger the dumps, the bigger the bounces, the more money one can make. But when you get into this like really slow, just literally months of slow, choppy crap, over analysis leads to over trading. Boredom can lead to over trading. When one feels bored in a market or whatnot, it can just lead to buying things to feel more quote unquote productive, like you're doing something. And so that's number one. And obviously, I started knife catching a little bit too early as well. You know, there's two sides of every coin, and one needs balance. So the one side of the coin is being too fearful in the market, like always hesitating, paralysis by analysis, never being able to execute, panicking when the markets dump, and so on and so forth. The other side of the coin is having no fear at all, and just you know, knife catching way too soon and just jumping in the line of fire with no fear. And I've gotten so used to knife catching that oftentimes when the markets start dumping, I just get too greedy, and sometimes I get a little too greedy too soon. So that's the flip side. So obviously one kind of needs a little bit of a bounce, or maybe patience. Not that one really needed lots of fear in this, but probably just needed to wait it out. I mean, this is a very sharp 1 week candle, but you know, the market dynamics have changed a little bit, where you know, we went from these sharp 1 week candles to this really slow bleed, and now we're starting to hit some counterforce, right? So you know, the latter half of this bear market, I did tilt a bit and did give some blood back to the markets, at least paper wise, anyways. But the battle's not over yet. We're still in the battle, right? When this all blows over, then we can count the chips and see how it all worked out, right? If we do hit this target here, in my opinion, a lot of alts will gain a lot. We'll probably see a lot more stuff like Waves and Factom. And if we do manage to retest this magnet zone of prior support, turn resistance, maybe we end up with an accumulation pattern a lot lower. Maybe this thing wants to just really mess with everyone and punch through, or maybe it doesn't go up that high at all. But if we do, let's say in Q1, moving into all this nice bullish news after the markets have dropped and everybody capitulated, and you know, everyone's pouring sand on their heads, and all is despair and lost and broken. If we can at least make it back up to this area, then I'm pretty sure, we'll see how the cards play out, but I'm pretty sure that these drawdowns that I've had will actually flip into green, into profit. And then my plan is just to keep what I've been accumulating as longer term stuff that pull off the exchanges, just keep that multi-year hold investment. The rest can just be hedged into cash, and just kind of hit the reset button on the trading accounts into cash, and then to you know, play the volatility game. And actually I would do that with the intent of buying another dip, right? So if we had, let's say if we shot up to this area and then we had a nice little dip, maybe to retest here, then I probably would want to, especially if we hit some resistance here, then I'd likely load up some more on a dip here, and maybe even consider adding more to my longer term investment bags. We'll see how that plays out. I still have fiat available for this lower band right here, with orders closest to the 2K zone, right? Heaviest at the 2K zone, just because I have to do that to give myself some wiggle room, just because I did start knife catching a little too early. So to manage risk, I have to set those larger orders closer to the bottom, and you know, that's that. So that's kind of so would you sell profits in USD and not BTC? I might flip into Bitcoin. We'll see how alts perform and such. I'll probably do a combination of both, to be honest, because it's nice to hedge some of it into USD as well, because it's just more stable, and I mean, when we were at like 2015 and 16, you know, the prices were so low, and I was just really kind of building up my portfolio, that I just wanted as many Bitcoins as I could get before we started the cycle. But you know, now that we're still in 4-digit Bitcoin, right? We're still in 4-digit Bitcoin. So even if we hit an accumulation cycle higher up, I still think it's probably a good idea to hedge some into fiat. You know, probably a mixed, I'd probably take a more of a mixed approach this time around versus just like all Bitcoin. And, you know, and this is also kind of like one of the reasons why I was really all of 2017, not just a parabolic, but, you know, we had that very wild alt season. I basically said, pull out hard profits, you know, just take money out of the markets entirely and never put them back in. Just make sure you're good. So no matter what happens, you're good. Actually, I just want to, I want to check in. I want to ask some folks, for the traders who've been here, who've been with us in 2017, how many folks pulled out hard profits, like into the bank or diversified into other stuff? All right, that's good. So definitely quite a few. Now a little bit more difficult for anybody who joined us in 2018. Obviously, hard to pull out hard profits when hard to pull out hard profits when, you know, the markets have been bleeding out type of thing versus like continuous gains. But yeah, you know, 2018 has been more about preservation, trying to preserve. Obviously, the first half was very, very profitable. For me, anyways, very profitable. Second half was just not my style, not my type of conditions. But, you know, it's good to reflect, especially as we come up on the end of 2018. It's good to kind of reflect on what went right in the year, what went wrong, what could have been changed. So I highly recommend folks to, you know, maybe like write down on a trading journal or just kind of reflect. You know, now is a good time at the end of the year, you know, and especially kind of moving into the holiday season and stuff and moving into the new year. Just kind of look back over your year, you know, list out the things that went right, list out the things that went wrong, and list your goals for 2019. What are your goals? Whether they be lifestyle goals, whether they be portfolio goals, profit goals, income goals, whatever that may be, list them out, right? And actually be very specific too with how much money you want to make next year. And so I think having like annual profit goals and having annual dollar goals is a much better approach than trying to have daily profit goals. Because with daily or weekly profit goals, you can end up forcing trades. Whereas like with annual profit goals, you know, you could literally hit your profit goal in like a couple of trades if you have the right conditions and you press the gas or whatever, right? So that's or it could all be done in like one quarter of the year, right? Let's say you have like, you know, a couple quarters of the year that are complete crap. You know, maybe it's better to go on a vacation and lie on a beach than trying to overanalyze things. Yannick saying illumination is my goal. Yeah, it's kind of like my lifetime goal. I think I need a few years for that goal, a couple decades at least. Open up my third eye. So it's okay, Rocky. Let's meet in Cayman again. Yeah, that'd be nice. It'd be nice. In fact, you know, in hindsight, you know, during this period, this would have been a good time to be like, you know what, let's do a market update once a week from a beach or something. This would have been a better time for that, because, like I said, overanalysis leads to over trading to feel productive. You know, or, you know, obviously, breaking support would have been a good idea to cut out. So let's go back to some altcoins. Let's look at some more alts since I missed a market update on Monday, and yesterday's was a bit shorter. What's my take on Litecoin survivability? Well, Litecoin's just, I mean, here's a good things about Litecoin. I'll tell you the bad things about it. I'll tell you the good things. Bad thing about it, it's a clone coin. It doesn't really offer a ton in the way of innovation, right? Good things about it, it's really, really liquid. It's one of the old school crypto that has survived. It never had an ICO. It didn't have a pre-mine. It was a fair launch. It's really, really good for... it's got ASICs, so the network's really, really secure. It's hard to 51% attack. For Scrypt ASICs, it's the top dog, kind of like Bitcoin for SHA-256. So that's pretty good. So it's network secure. Bad thing is it was able to implement a lot of the features like segregated witness, Lightning Network, and all that stuff before Bitcoin. So that really gave it a boost last bull season. So it doesn't have that going for it anymore like it did last year because now Bitcoin's integrated that. But there's a lot of symbiosis between these two coins. So we'll probably see a lot more intertrading between atomic swaps. You know, out of how many years later, you know, it started in 2012. Network's been running fine since 2012. So we know it's nice and secure, good solid proof of work coin. So we're like, what, six years into it. And it's still chugging. It's still in the top 10, right? These are all good signs. I bet you in 2020 it's still gonna be chugging along. So it's got very similar dynamics as Bitcoin in that regard, right? And from a personal view, why I like Litecoin is I actually use it like an actual currency, right? I purposely have chosen not to have Litecoin as an investment. The reason for that is for taxes. So I have Bitcoin as an investment because obviously Bitcoin's the king. And I think, in my opinion, for my crypto portfolio, investment wise, I never want to not have Bitcoin in my portfolio, right? I always have to have it as a foundation and staple in my portfolio no matter what, right? Litecoin I don't have as an investment in my portfolio, so I use it as a currency, so I don't have to pay tax. I don't incur taxable event. So if I want to pay someone, if I want to say, hey Bill, you know, I'm going to pay you for XYZ, then I'm going to take fiat, I'm going to buy Litecoin, and I'm going to send Litecoin, and I'm not going to pay a taxable event on that because I don't own any as an investment. It's really, really fast network wise, and the fees are low. So, you know, they say Litecoin's to silver to Bitcoin's gold. Well, gold is for storing, like a store of value, and silver is for small purchases, right? If fiat were to suddenly collapse and we went into metals or whatever, or if we go back to the old school when money was just metals, you know, silver was for spending, right? Silver coins. And so I use Litecoin for spending. So if I want to spend crypto, I'm not going to spend crypto that I'm invested in because I'm going to pay more. I'm going to pay the cost of the product, and I'm going to pay a taxable event. And it's going to mess up my accounting. I'm going to have to figure out the cost basis of everything, and it's going to be months of headache for my accounting and shit. So more and more as I get into crypto, I've just kind of like really trying to just streamline systems to make things way more efficient for myself. To like moving into 2019, I want to save more time on my accounting, and just save more money, and focus a lot into passive income streams and stuff like, especially with prices being so low. Really build up the investment portfolio side of things with prices being so low. And so I find Litecoin is just really, really good as an actual quote unquote cryptocurrency, and it's liquid, right? So you can actually send large payments or get paid or whatever. You know, if someone wanted to pay me crypto, I say, send me Litecoin, and then I probably would just cash it out immediately to fiat and put it in the bank. And that's what I've done. So 2018, that's how I've been using Litecoin, right? paying people, getting paid, because obviously crypto's still a very fast and efficient way for doing payments internationally, right? Just give someone your exchange address that's linked to your bank account, and they pay you in Litecoin, and you cash out, and it's in your bank, and then it's done. Boom, someone just paid you, and the fees were super, super low. So that's how I've been using Litecoin. So this is why I think Bitcoin maximalism is flawed, right? Because I think the crypto ecosystem, first of all, there's not just going to be one coin that survives. That's a bunch of fairy tale crap. If that were the case, then Bitcoin would have never been open source. And second of all, different coins can have different features and different use cases, right? And because of taxes and the current system we have, Bitcoin cannot service all our needs. It just can't. I never use Bitcoin anymore as a currency. I absolutely hate using it as a currency. You know what I do with Bitcoin now? I just sit on it. I just hold it like I sit on gold, and that's it. I don't use it for anything else, right? Just because it's too much of a pain accounting wise and tax wise, right? Too many taxable events. So in my opinion, Litecoin's a really good currency for that. Maybe you might choose another one. Maybe you might choose Ripple or something else. Ripple could be good for that same purpose too. It's also fairly liquid. All right, enough fundamental ranting. So looking at some altcoins, I'm going a little bit longer today just because I missed Monday and yesterday's was pretty short, and there seems to be a lot of action. So there's a few things. So there's a few things I was flipping Bitcoin into at the lows. Obviously, no surprise, I stocked up on more Tezos and Zcash at the lows, flipped some of that Bitcoin into it that I bought a little bit higher as dry powder. Those are out of sight, out of mind, pulled off the exchanges, put on cold storage, not going to look at it unless prices go stupid, or unless we're in the year 2020, or unless they go to zero and then I end up, living in a shopping cart. Just joking. But, you never know. So ADA was another one. So I was talking about my market updates last week that I was interested in getting into some ADA. I did a starter size. I didn't completely buy as much as I wanted to. So on the BTC charts, it popped up. This was one that I did kind of catch fairly close to the bottom with some of the BTC. Guys, my pod saying living in a shopping cart, literally just spit my food all over my computer screen. Yeah, I mean, if your crypto investments or trades will cause you to live in a shopping cart, then that's not very good risk management. Don't do anything so drastic that will, really seriously impact. I joke about it, but I mean, for some people that might be. I would never want to see anything completely drastic happen. Everyone has to realize that crypto's still new and risky and experimental, and we're on the cutting edge. And this is the thing, like when you're early adopter in new tech, like you're so on the bleeding edge of like high risk and high reward, right? High risk and high reward. One can't make those crazy 20 to 30,000% gains without being on the bleeding edge of something really, really new and experimental that's never been done before. That's how it's been done, right? If one just goes for something that's completely safe and stable and whatever, one can obviously, really reduce the risk, but also at the same time, you can reduce the reward too, right? So, in my opinion, Bitcoin's still quote unquote risky compared to other assets in the market, but out of all of crypto, it is the least risky, right? It's the most liquid and most established. Whereas new experimental altcoins that are, perhaps trendsetters in technology and innovation are very risky because they're trend setting. They're they're on uncharted territory and stuff that's never been done before. So obviously there's going to be growing pains, just like we've seen growing pains with Ethereum, right? How many growing pains did we see with Ethereum? We saw the DAO hack, we saw the parity bug where millions got locked in the parity bug. We saw just a lot of glitches, right? A lot of problems. We saw the network getting congested with these Ponzi crypto kitties, these cartoon kitties where you'd feed them with ETH, and that was bloating the network. So it's not as growing pains. But for all of those growing pains and stuff, the rewards, if one weathered through the storms and the drama, was just absolutely absurd rewards. And then sometimes you take on the risk and you actually don't get the rewards. Sometimes some projects just completely die. So obviously one has to try to choose wisely. Anyways, I digress again. Let's go back to the technicals. All right, so let's see. So ADA popped up a little bit. You know, USD it's up a little bit. I mean, it's not anything I'm getting excited about, right? Like, I'm just gonna show you. From here to here is no price action worthy of getting excited about, right? The type of price action that I find is at minimum worthy of getting excited about is something like this, right? Not this. I mean, you could trade the smaller moves. You can do it. I mean, 67% is nothing to shake a stick at. But, you know, and then it gets tighter and tighter, just almost flat, and then it only bounces up 36%. You just kind of see, you almost see like the bounces just getting smaller and smaller. And then let's see if there's a better, and then obviously, like, I don't know, here went up ridiculous levels, right? Just went up absolute ridiculous levels. And then you just see the bounces getting smaller and smaller. And now on the larger time frame, pretty much from here to here, even though it's kind of been bleeding out, this whole market just kind of seems flat on the larger time frame. When you zoom out a bit, it just seems flat. You know, percentage wise, still a bit drastic. I mean, even though it looks flat, you know, from this high down to here is, wow, still an 88% drop, right? On a market on the daily that looks completely flat. That's zooming out. So like from here to here, still a massive drop, right? But I think let's see if we. Here's an interesting thing with ADA. Let's see. We kind of have a bit of a give or take, right? There's a little bit of it's not perfect, but the concept is there. Lower highs and lower lows, tighter range, squeezing in a descending wedge, right? Very similar to what we saw in waves. Very similar to what we're seeing in a lot of markets. So let's just look at the BTC market, right? And so for the BTC market, let's see, structurally, is there any similarities here structurally? Not quite the same. I bet you if I were to pop in RSI, I bet you I'd see some divergence. Yeah, you see some divergence here, just like a lot of markets. This is why I really feel like we're getting much, much closer to that reversal point. Because we've, you know, market sentiment wise, we know we've hit points of severe pain in market sentiment. We've got divergence, a lot of things. We've got these very, very tight ranges, very small like just very small bounces. And like we know with altcoins that whenever we tend to see this, we often will see explosive moves afterwards. It usually requires a bit of patience. Might not be instant. It can take a lot longer than people anticipate. But the type of explosive moves are, that I look for, that where I start to get very interested in alts. And this is why I tend to be very, very patient with alts when buying, trying to buy low in this. I mean, you buy low and it can look flat and choppy and look like accumulation, but it can last a lot longer, can test your patience a lot longer. Obviously that's why position sizing and all that stuff is important. But when they do take off, then you end up seeing stuff like Factom and waves, and suddenly it's like, what the hell just happened? In 1 month, it just took back a year, 6 months of losses in the market, right? And I've just seen this time and time again. And obviously, past performance is not indicative of the future, so absolutely nothing is guaranteed. Just because one anticipates this and one is waiting for it doesn't mean that we're going to get it. But when I start to see stuff like waves and Factom, big movements like that, it's a good sign. It's a good sign. It's that popcorn effect, but like a solid trend, a good solid bounce, not this weak stuff. Very, very weak. There was another one, I think. What was the other one that was really kind of taking off, popping off? Strat. Yes, that's what it was. Strat. Okay, so Strat hasn't pulled off a waves or Factom yet, but on the BTC chart, it did break out of this lower range. So one could say that perhaps this is like a lower accumulation range with a final kind of sell-off. So just on the BTC charts, lots of months of sideways. Just, half a year of sideways, really, for Strat. But are there any USD markets on this or what? Is this even... USD wise, it's still very much, it hasn't broken out of the range yet, so this is why it's good to look at both, right? But one could say that this is the lower end of the range right here. And then if it starts to break that, then we're popping into a new waves, a new Factom type movement, right? A new wave. So, and then it doesn't look like much, but off the bottom, it's up over 100% USD, right? And so this is also kind of like one of the reasons why I look at the larger time frames, because in altcoins, okay, I'm going to go to something that looks, in altcoins, it's those real explosive movements of trending markets that's really the whole reason why I trade altcoins is for stuff like this. Stuff like this, or any variance in between. I'm not really in it for the smaller stuff, the smaller movements. That's just me. It's more of like a time management thing and where I'm at in my trading / investment career, a crypto career, I should say. That said, I used to trade a lot more on the smaller time frames, like going back to the 1 hour. Nowadays, I pretty much almost only look at the 1 day, because that's where I'm the most interested in, are those really explosive movements or explosive drawdowns or whatnot, dumps, and the 1 week. But, there's certainly nothing to shake a stick at getting more frequent trades and, playing the smaller time frames as well, especially if one's just kind of getting into trading or It's all personal, right? It's all personal what your personal goals are, you know. My personal goals is I just want to spend a lot less time trading. I'd much prefer, monthly and quarterly type trade cycles versus daily, or that kind of stuff, right? And same with last year, 2017. I'd hold trade positions for months before cashing out. Maybe skim a little profit. It was a lot of it was like trend riding, right? So I guess like my point is that we've been in such a long bear trend, such a long drawn out bear trend that that I don't want to cut myself short if we get some explosive counterforce, right? I want to wait for I'm waiting for the big swings, the big moves. And if I have to wait for a long time, then I'm just going to wait for a long time. And that's also why I've put a lot of focus into almost cycle to cycle now, right? So there's some that's kind of like monthly, quarterly trades, but literally there's stuff that being stockpiling that I'm thinking multi-year investment, cycle to cycle, capitulation to parabolic blow off top, right? I think that's ultimately where I'm going to end up paying the least amount of tax and get the most bang for my buck, right? Save the most time, get the most profit, pay the least tax, just like win. That's really a huge focus and where my mindset is at these days, especially after things bled out so hard and at such low prices, right? So I'm waiting to see if we get some explosive moves. So far, it's a good start. We'll see, but maybe we end up chopping around, right? I've been patiently waiting for months for this some explosive moves in this sideways chop, and like I said, I'm usually on the ground floor during accumulation on these market cycles, but it's not always easy, and it really tests your patience, and sometimes it can lead to some drawdowns. But in my opinion, and this is kind of why I've been a little bit, in hindsight, I definitely should have used a stop. I did have a plan to cut out on the break of 6K. I didn't follow my plan. So that obviously that was a mistake. But, when we're in this like sideways, slow, choppy grind on alts, I generally don't really use stops that much. I just position size and average down, and I actually treat things like it's actual accumulation, right? Like if there's a different strategy, it's a different strategy than like, setting a specific target and a specific stop and, very measured move, so on and so forth. Oftentimes, and that can work really, really well. I tend to definitely use stops if I'm, if the prices are a lot higher, right? If they're a lot higher, but I find like when things are really gritty, I just usually wait things out, but that's not always the best approach either. Maybe there's a hybrid approach, but with accumulation though, what is the act of accumulation? What the hell does accumulation mean? People talk about accumulation, but if one has really small targets and tight stops or whatever, that's not really accumulation, right? Accumulation is you're buying inventory. You're stocking up. You're buying. And if it goes lower, you're buying more. And so here's a chart shared right now. This is a very, very interesting chart. So it's kind of comparing 2014 to now. And yeah, I kind of, this is kind of what I'm seeing too in this chart, right? This is pretty much kind of sums up exactly how I view the market right now. The only difference, the main difference in these two charts is here we had a lot of kind of like lower lows and lower highs. And here we had a lot of compression at the 6K area, which it slightly changed the market structure, but it's still very similar fractal wise, even almost like right down to the days, right? And so, yeah, it was like less liquid. So we had more liquidity at the 6K level to hold it up. So an 85% drop off the top, fairly close to 85%. Maybe it might not be an exact 85% this time. Maybe it'll be slightly less than 85 because of more liquidity. We'll see. So we'll have to see if 2019 ends up being this real accumulation. And then, you know, this would be like the V-bomb I'm looking for a retest, just like we had here, a retest of the prior support turn resistance. And that's kind of what I'm expecting for this. And this is why I would use this as like, for at least for my trades. Nothing, what I have investment wise, I'm not touching, but at least for anything in the trading accounts, this area right here is where I would do my final close. And hell, if it wanted to punch up through and V-bottom into the moon or whatever, then you know what? There's always going to be another dip, right? There'll be a throwback to retest 6K or whatever, and whatever. It's all good, right? So that'll be a good scenario. I won't complain, and my long-term investment bag certainly wouldn't complain either. So either way, it's a total win-win. Even if this isn't major resistance and we punch through. So obviously we're just got to play the waiting game to see if we can make it up that high. So Bill's saying, this is mine from the 17th. Looking back, it's easy at the moment. Existing within the storm of fear, impatience, and greed is very different. All right, let's look at these charts. All right, so this is one from Bill. All right, so yeah, this is 2014. False accumulation, bear trap, slow grind, breakdown, and pretty much the exact same thing. Slow grind, false accumulation. Yeah, bull trap, sorry. That's a bull trap. And then breakdown, capitulation. Definitely, you know, fractal, very, very similar. You know, very, very similar. So it's actually quite eerily similar how well these fractals play out. So will we go into, the question now is, are we going to go into year-long sideways accumulation? And if we do, well, then in my opinion, it'll be much better to be an investor than a trader, in my opinion. I also saw something ironic. What was this market? What was this coin? SUB. They came out, they did an announcement. They said, in order to survive this bear trend, we're taking our capital that we raised in the ICO and we're gonna become traders. We're going to become traders, right? It's like, well, it's a bit late for that, right? Again, it's just kind of following what's kind of trendy. And B, notice how like I'm moving from being more of a trader into an investor with these prices super low, because I'm like, I see the value of like cycle to cycle and less taxable events. And when things were crashing and popping off, I was more of a trader, right? Because you want that volatility. But now that things are flat, suddenly you've got some projects coming out saying, yeah, we're going to just focus on trading to preserve our capital. Well, it's like, well, you've pretty much lost most of your capital. You know, it's now is pretty, you know, if you've accumulated a bunch of ETH in your ICO and it dropped 90+%, it's a little bit late for that. Number one. And number two, the markets are really slow and sideways and choppy. And we might even end up in a prolonged sideways choppy accumulation period, at which point it's actually going to make a lot more sense to accumulate and focus as more of a longer term trader versus trying to do all these small moves. And then if they want to start adding leverage to that, then they're just increasing the risks. They might even liquidate their entire account. So, but that's market sentiment, right? This is the nature of the game. This is the nature of market cycles, right? So that's pretty much that. And I'd say a lot of these markets, they're all correlated. There's some taking off a little bit more than others, like Stratus. Chainlink's up a bunch. There was another one that really popped off. I think there was another one that was up. Actually, let's just look at the gainers. Okay, so I only like the liquid ones. Okay, so Strat's definitely top dog here. This is Monocoin. That one's kind of popping off. So with those ones that are really gaining, I wouldn't be surprised to see them pull off like a Waves and a Factum. Okay, so this one. And how many days? 3 days. It's recouped on the Bitcoin charts. In 3 days, it's recouped. How many days of sell-off? Let's just put this in, you know, just many days of sell-off. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Like over a month of selling off. And it regained in 3 days on the BTC chart. And what it took a month of slow grind sell off back into this zone. See if there's any yeah, look at this liquidity on this USDT chart. This is some prime trading right here. So right here you've got basically it's like this pennant like formation here, and anyways, okay, so there's no good there's no good USD chart on that. I heard GNT got added to Coinbase. I'm okay with that. Ooh, quite the reaction there in the GNT market. Hold it back. Is this just a classic like dump on the news again? Doesn't fail, huh? Added to Coinbase. All right, let's dump it. You gotta love crypto. You gotta love crypto. Anyways, that's fine. Whatever, you know, stuff like GNT. The new users come in, they'll have the option to buy their Golem. So almost seem. All right, so that's GNT. Stuff like I've noticed stuff like Tezos and Zcash seem to be underperforming a little bit right now. Tezos isn't really that liquid, as far as, you know, the liquidity's really dried up a lot. I mean, on the sell side, there's a lot less than on the buy side. It seems like there's a lot more buyers than sellers at this point. The thing is too, interesting thing with stuff like Zcash, and this is why my projection is more into 2020 right now, is that we got to get past the founder reward hump, right? 20% of the block rewards are still going to founders, and those folks have to pay tax on that stuff. So it wouldn't surprise me if there's just been a constant stream of selling pressure, not just from miners but from the founders. So 2020, once that's priced out of the system, we'll have and the block reward halvings drop. Then we're going to have a lot less selling pressure on Zcash, similar to what we've seen in every Bitcoin halving or Litecoin halving as well. And then with Tezos, you know, the liquidity, there's not a lot of liquidity here for a couple of reasons. One, 80-something% of the network's baking, right? So there's not a lot actually on the exchanges. This could change if exchanges started baking and giving people the rewards. I think one of the exchanges does that. If we could start seeing that with Bitfinex and Kraken, that would be good. Obviously, baking can create some selling pressure as well. We need, in order for things to shift on a fundamental note and the supply-demand dynamics in something like Tezos investment-wise, we need to see more utility use cases for XTZ. And because the ecosystem's still so new, like almost like ETH and gas, right? You know, with ICOs or with dApps and stuff that all require Ethereum, it's just more demand, which puts more buying pressure on supply. Mining is selling pressure on supply, so it's always this dynamic fundamentally of supply and demand. And so with Tezos, we've got a lot of people baking. That's a lot of selling pressure as well. If any of those folks are selling, I imagine most are just kind of accumulating at these lows. And as we see more dApps in the ecosystem growing, then that'll create more use case and more demand, more media attention, more, Tezos isn't getting a ton of media attention or anything right now because it takes time. It takes time for the whole industry, for the whole thing to build up, the whole blockchain and more dApps and stuff to build up. So still very new and early. So I'm just being patient, but they're underperforming right now, which actually kind of gives me some more time to perhaps stock up on a bit more. Other markets, because those are longer term investments, I'm not really terribly concerned about the day-to-day fluctuations. Unless it goes lower, then I'll buy more. That's my only main concern. And then I just want to look at one last thing, see if there's anything else on these gainers and losers list that has volume. Okay, so we looked at Bitcoin Cash. Did we look at Mana? I think we looked at Mana. Let's just see if yeah, so we did look at that. And anything else standing out that's got volume? Let's say the next thing on the list that's got a bit of volume, that's up 30%, stuff like Nav. So sometimes those really, really big early gainers could lead to more trending stuff, like with waves. So that's something to pay attention to. If you start seeing like consistent like 30, 40, 50% days on a particular coin, you get enough of those days consecutively, and next thing you know, it's up like 300%, right? So that's just something to also pay attention to if one wants to try to trade the bigger gainers over the other ones. But of course, it's also best to kind of wait for dips and not just FOMO into spikes, right? So it's waves. There were multiple waves along the way. Anyways, on that note, we've done a nice long update to make up for missing Monday and a shorter update yesterday. So we'll end it on that note. Take a while to process and send it out. So have a great day, and I'll see you all tomorrow. Take care. Cheers.